Hi, it's Mike Power with Silver Range, and here's a look at junior mining markets as we roll into summer of 2026. First, a quick word from our lawyers. So let's have a look at junior mining markets and see what's going on in financing world, the lifeblood of our industry. We'll see what the promoters are looking for in the ways of new properties, and close off with a quick look at what's going on at Silver Range. Here's the Venture Exchange, where most junior mining companies hang out. And you could be forgiven looking at this chart for concluding that perhaps the boom we've enjoyed over the last year and a half or so is over, and we're heading towards another mining slump. Here's the CSE, and there's something missing. It looks like the companies on that exchange never enjoyed the boom that the venture did in the last year and a half. Well, junior mining is largely gold mining, and the gold price peaked last February and has been heading down since. And gold miners, here's GDXJ, the Cadillac crowd, after playing catch up, caught up with the gold price, but they've turned down too, and if anything, they're turning down a little faster. So, what might be going on? Well, there's some short-term downdrafts here. Gold needed a break after running up to $5,500 almost asymptotically. It would be surprising if the gold price didn't retreat a bit and build a new bottom, and that seems to be what's going on. AI is sucking enormous amounts of capital out of the market, and there's likely a correction in sight. Historically, markets get a little queasy in the fall over the last couple of 100 years, and that might be happening this year. And I think people are looking to see what's going to happen with AI this fall. We lost a war, and that's never good for markets. Got a new Fed chair who might want to establish his bona fides by perhaps ratcheting up interest rates a little bit, although I don't think he really wants to take the blame if the market subsequently crashes. He knows where he's going to get grief. And finally, US midterms. I think a lot of people are wondering where things are going down stateside after November, and I think that's putting a bit of a pall in the market. All of these are kind of short-term downward pressure sort of things, a lot of which might be resolved by late fall. Longer wavelength, nothing's changed. We're in the middle of a debt super cycle. Um, American dollar is tremendously over leveraged. There's going to be a change in reserve currency to something new, and that's being signaled by central banks buying gold all around the world. We're in fiscal dominance now, where basically the dollar can't be buttressed by playing around with interest rates because the deficit's getting expensive to finance. So they're going to let things run, and we'll likely see some inflation, and you might see some interest rate suppression or something more drastic. And these are very positive features for gold. So long term, very bullish on gold and gold juniors, but we're facing some downdrafts in the near term. Okay, let's have a look at financing activity, the best real-time indicator of the true health of junior mining markets. Without money, nothing happens. Total financings are averaging about 925 million every 2 weeks. They've been sliding a bit since this spring, but all in all, they're in pretty good territory. The number of financings peaked at the end of March, however, and they've been on a steady slide since then. Average financing size has improved dramatically since the dog days of 2023. The raw data is in blue, and as you can see, it's quite choppy. You might want to look at the trimmed average in orange. That's where we lop off the top 5 financings in every 7-monthly period. And that trimmed average has improved from about 1 million back in the summer of 2023 to about 3 million right now. But the reason for that isn't entirely healthy. Turning to the bottom of the market, where we and our clients tend to hang out, things aren't quite so good. The average financing in that sector has dropped below about 35 million, which puts it into bad territory. And the trend is not your friend here in this case. It's been trending down since the beginning of the year. So there's pain in the bottom of the market. They're not able to get the smaller financings done, which are necessary for grassroots exploration. This sort of puts it all together. There is money coming in at the top of this market, big money, and it's heading towards production, advanced projects. Not a lot of these companies raising money, but they're raising big dollaros. At the bottom, companies are having a hard time raising cash, and the proportion of very small financings is still at an unhealthy 21%. The companies in the middle trying to raise between 200K and 2 million are getting squeezed. So I think we're still looking at a fear-driven market. Financings in aggregate are starting to dry up, and the money that is coming in is going increasingly to projects at the top, producers, developers, advanced projects. But there's no real appetite for putting money into grassroots exploration. Well, enough of that. Let's have a look at what the promoters think the future has got in store. See where they're placing their bets. Well, on the whole, they're not placing quite as many bets as they were last fall. And since then, option activity's been on a general decline. And when it comes to picking up new projects, promoters are increasingly betting on gold and silver at the expense of uranium and critical metals. So putting it all together, I think we're still in a fear-driven market where money is going in at the top to producers, developers, and advanced projects. But there isn't a lot left at the bottom for greenfield exploration, and companies trying to do smaller financings are getting squeezed. This has led to less option activity, and what option activity there is increasingly concentrated in precious metals. And we don't think there'll be much improvement before after the midterms, so perhaps by November. Well, what's this all mean for Silver Range? We're doing a lot of property exploration. We're finished some geologic mapping out at East Goldfield and some shallow diamond drilling, and we're planning a large IP survey there later this summer. We're working at Drum over in Utah, purchased a large data set, and we're planning on hitting the ground running there this fall. We'll be picking up some new projects. We're always doing project generation, and we expect some partner news. And who knows, maybe an option or two in the near future. So that's it. Markets might be a little slow right now, but it's a great time for us to get out there and find something new, and we're hard at her. We believe things will turn around by November, and we'll be ready. So long.